The S&P 500 is about to crash as it makes its last stand. I'm your host, Steven Van Metre, and thanks for joining me for part one of the Sunday Chart Show, where we look at the technicals of the S&P 500, Nasdaq 100, Russell 2000, and junk bonds. Let's kick it off with the S&P 500, where we're looking at a breadth indicator, the percentage of S&P 500 stocks above their 50-day moving average, a mere 21.5%. Now, keep in mind, when a stock or an index is above its 50-day moving average, it's considered bullish. When it's below, it's considered bearish, and this is well below even a -2 standard deviation event. And so what you're going to see is when this many S&P 500 stocks are below their 50-day moving average, those who are bullish are going to buy this because they think it can't get worse. And that's kind of the theme of today's show. It just can't get worse until it does, and so you get a reflexive bounce. Notice not as many jumped here, but the S&P 500 jumped much higher. Why is that? It's market cap weighted, more money flooding into those big top 10 stocks, driving the index higher. Now let's zoom out to the percentage of S&P 500 stocks above their 200-day moving average, and where you see this is when a stock or an index is above its 200-day moving average, it's considered to be in a bull market. When it's below, a bear market. So right now we're seeing a mere 32% of the S&P 500 is in a bull market. The rest, 2/3 of it are in a bear market, and we see that jump on those above the 50-day moving average. Notice now those moving above the 200-day moving average went from roughly 30% to 32%. So not a big move despite the price jump. So I was telling you, it was really very tactical based on the 50-day moving average and the 200-day moving average being well higher than the 50-day. Let's look at the bigger picture for the S&P 500. We talked about, in the last couple of weeks that, as it tried to rally up here, we look at the historicals now of the percentage of S&P 500 stocks above their 200-day moving average. If it couldn't break through, that it was going to weaken and fall below, and if it couldn't hold that around that 40%, 35% level, it was coming down to probably around 20, and again, we're at 32%. We've got a long way down to go, so we're talking now potentially the last stand for the bulls here. Let's look at the momentum indicators. If you have the relative strength indicator, what you're looking for here is a number of 40 or higher to tell you the momentum's positive. It didn't get down to oversold conditions, which hit at 30. Came pretty close. It doesn't have to get down there. You can see back here in September, didn't get there and still had a nice price rally up. So at the moment, not quite at 40, but very close, potentially hitting 40 on Monday. Let's take a look at the MACD, the moving average convergence divergence, or as I like to say, crossover strategy, because what you care about is when the black line, the MACD, crosses either to the downside of the signal line in red or to the upside. If it's to the upside, that's good. If it's to the downside, it's bad. And you can see the MACD is not confirming what happened on the RSI at all. Both momentum indicators. So MACD a little bit slower, going to take a little more time to see if it builds here. Again, potentially last stand for the bulls. Let's look at Momentum Timer Pro, which takes not two of three indicators. It takes an RSI over 40, a positive cross on the MACD, or its own internal signal. If you get two buy signals out of the three, it flips to a buy. Now, how you read this, and if you're not seeing this before, you've been thinking about signing up, it's still free for who knows whatever reason why. There's a link up in the corner and the description below. But here's the deal: when it goes from a sell signal on the daily account to a buy, that is a strong indicator. But I want you to understand, this is a 1 month, 3 month, and 6 month indicator. It's telling you no position. So the way you read this, if it's telling you the stock or an index is in a downtrend, which this is, and it flips to a buy, it says, look, it's not as good of a chance of buying in. Maybe reconsider your risk. Buying on a downtrend is risky, and your probabilities are much higher to wait. Or if you're going to trade it, keep your stops super tight. All right, let's take a look at the bigger picture here. We've got the 21-day, 50-day, 100-day moving average, price bearish, meaning it's heading lower. The momentum to the downside. Below all the key moving averages, broke 12-month momentum last week, meaning price is now below where it was 1,369 and 12 months ago. Let's look at the price charts and the volume profile. So we've got that turned on. You can do that with your charting software, and where you see on mine where this thick red bar is, that's where the most shares were traded over the last 2 years. So we're looking at a 2-year chart now, and we need to go to the SPY, not silver. That'll be on the next show. And here you can see a beautiful topping pattern, potentially left shoulder, head, right shoulder, and and you'll notice these supply zones. And what happened last week is price came down to lower supply zone, and that is generally what happens is if a supply zone, meaning where buyers are at here, turns into where sellers overwhelm them, it will go down and look for the next level of buyers. That was around 390 on the SPY. Buyers came in here and brought prices up. So where do we go from here? Well, let's first look at the 10-day volume profile, and notice all price did was come back up to where the most shares were traded in the last 10 days, where most actually the selling occurred. But what would we expect, or what can we kind of think is going to happen is if price can move to the upside, it's going to get up into this low 400 level, maybe 410 to 415. But normally what you would want to expect is a bounce between supply zones. So it would not surprise me at all to see the bulls rally price up into the supply zone and see if they can flip those bears over into bulls. If not, price gets rejected, comes back down and breaks through. This whole thing comes apart. That's why I'm calling this the bulls' last stand on the S&P 500, but with the Fed draining liquidity, it may not have enough firepower to get all the way up into that supply zone. But again, we've seen big rallies before, and people are convicted they want to buy it, and now you're seeing potentially the early stage of making a run there. Look for your first move to 406, and then a run into, say, around 415 to see if that can hold. Let's take a look at now the Nasdaq 100. Equally ugly picture. You see the percentage of Nasdaq 100 stocks above their 50-day moving average is a mere 14%. So only 14% of the Nasdaq is in bullish mode, and that's pretty low considering it got down to 10%, a minus 2 standard deviation event over the last year. And last 2 times it got near there, it turned out to be, well, not much of a buying opportunity and not much more of one. And this is where we talk about buying a downtrend with momentum time pro. You get a signal in here to buy, but the move is very short. You get a signal here, you get a little runway to work with. That's why buying downtrends, especially on technicals, doesn't always pay off. Let's look at the percentage of Nasdaq 100 stocks above their 200-day moving average. Notice there's really no difference. We went from 14% above their 50-day to 16% above their 200-day. It's just telling you the Nasdaq is down and out right now. Only 16% of those stocks are in a bull market, well below a 2 standard deviation event over the last year. Historically, well, it tells us that we're about to see a big meltdown in the Nasdaq, and that could lead us to somewhere around, say, 5%, a minus 3 standard deviation event of perhaps less than 4% of the Nasdaq above its 200-day moving average. That would give you an indicator of when to buy, but that's going to come with a massive plunge in stocks. So watch out for that. Let's look at the RSI. It's just under 40, so momentum trying to move higher, trying to break out here. How about the MACD? It's just like the S&P 500. It's kind of a little slower signal, so it's going to take a little more time. And as you can guess, Momentum Time Pro holding sell signals across the last 24 days. Again, you're in a downtrend here. So if this were to flip to a buy signal and lights up gold and you say, hey, I should buy it, just keep in mind, if you're in a downtrend, buying a move on the technicals does not always pay off. It's a gamble, so keep your stops tight. Of course, as we know, price across the moving averages is bearish. Momentum to the downside below all the key moving averages definitely has broken momentum over the last 12 months. Everything on the Nasdaq looks pretty bad. And let's pick up QQQ. And here you can see it came down into a little supply zone. In fact, I didn't even, actually it's a pretty, I've got the lines and need to adjust them here a little bit in the wrong spot. Let's copy this one here and let's move it, duplicate. And so this is there's not a ton of volume there, but we'll have to mark it. So you can see it came down to the top of the supply zone, got into the supply zone. If you ever wondered what Elliott wave theory is, it's just a movement of price between supply zones. I mean, it's all it is. It's just a wave count between supply zones. If you're a big fan of Elliott waves, start drawing supply zones in. It will make a lot more sense. So where should we see QQQ run? Perhaps up to 310. First move, would we be looking to the upside into this supply zone here to see if it gets rejected? Look at the 10-day volume profile just above it. So I was telling you, sellers are all above here. It does seem coming out of these supply zones, you want to see a price rally. Again, we're going into an illiquid market. The buyers are running out of steam. But if there's upside, look to 310 first. And then if it can get up to 319, 320, or anywhere close to that number, watch out, it's going to get rejected. At some point, you would expect both the S&P and the Nasdaq to come up and touch their 50-day moving average. But with what the Fed's doing, Not a lot of confidence on that. How about the Russell 2000 small caps? You got a mere 14%, 14.5% above their 50-day moving average. It is battered and beat up, got down to around 10%. Price jumped again. You're seeing all of these market cap weighted index prices jumping despite not many stocks moving over their 50-day moving average. How about we zoom out to the 200-day moving average? Same story here. So you've got, what do we say? 14% are bullish, and now you've got, 15% of the Russell 2000 in a bull market that is very weak, -2 standard deviation event. Historically, look at this big downtrend. Tells you this thing is going near zero, which will be a -3 standard deviation event at some point. There's your buy signal. This whole beautiful topping pattern comes unraveled. How low it goes, I don't know. How about the RSI? Just under 40, just like the other two. Went from oversold. That's where you're going to get some buyers coming in, looking to build momentum here. MACD, again, slower indicator. And so no surprise, Momentum Timer Pro, 2 out of the 3 signals saying sell. It's in a downtrend. Again, be careful on the flips to a buy in a downtrend. If you're trading using this, check your charts or keep your stops super tight. Don't automatically buy into a downtrend. Just save your dry powder for another day. How about price? Bearish on the moving averages. They're all headed down, momentum down, below everything. It's ugly. Let's take a look at IWM, see where this thing could go. And remember, we talked about before, it's got this gap down here. Well, it came right down to the gap, found buyers, and the question is, will it fill this gap? Well, it will fill it at some point. And let's zoom out to the 5-year chart. You can see there's a little bit of a supply zone. That's what you see, there's a volume. There's not a ton here. That's where the buyers came in, bought it up. You're looking at potentially 183 to 180. We'll just see maybe 190 of upside potential here before it runs into sellers. Clearly a lot of downside protection over the last 5 years. If it doesn't hold there at some point because we enter a liquidity crisis, well, there's no telling what happens when everyone starts selling. Let's take a look at junk bonds, which are telling you there is a liquidity crisis coming, and the Fed is going to be at the hands of this one. Momentum still on the RSI down to the downside, hasn't reached oversold conditions. Price continues to head lower despite being oversold for a very long period of time and really not picking up much positive momentum. MACD, had a chance at it and gave it up. And of course, what do we know from Momentum Time Pro? You sign up, next report out on Monday. Price, bearish, momentum, bearish. This thing's just been red for weeks, so no point in looking at that. Let's look at the chart because it's also pretty ugly. You're talking about a chart that tells you we are in a recession. You got to look. The last time this thing got this low was 2015, and China saved the world. And then we had the pandemic, and it was breaking down here. There's literally no support holding this back. Just waiting for something just to tip it off the edge, and this thing could just massively unwind, be an opportunity if you're interested in the junk bond space. But hey, with that, we're going to be back in a little bit for part 2 of the Sunday Chart Show. Appreciate you watching. I'm Steve Van Metre. Bye now.